Let's have a little bit of a closer look at inflation. And one of the reasons that I'm not worried about inflation, and I think the RBA has gone wrong, is if you have a look, it's at crazy high levels at 7.3%, okay? But if you look at where it's coming from, the large portion of it is coming from housing and then food and then transport. So the big drivers are housing, food and transport. Now, theoretically, we shouldn't be too worried about housing for a couple of reasons. Number one, you know, it's a fact that pretty much 70, 80% of Australians own a property. So if housing's gone up, your values have gone up. So you've had an inflation hedge. So you shouldn't be too perturbed about inflation if you've made money on your housing. And particularly you can see Sydney, and I think all the houses in Australia last year, the national average was near on 20% growth. So that's going to be a natural inflation hedge straight away for you. Now, food has gone up a lot, and a large portion of that is the fact that we've had, you know, such consistent and regular, you know, interference through floods and fires. Now, that's something that to me, okay, is naturally causing it, but it's not a normal economic condition. It's something that is happening as a result of a one-off occurrence. Now, it's happened more than one-off, that's the only issue, but it's not surprising to see inflation have a boost. And same with transport. A large portion of that is fuel costs, but also flights. And what you're seeing is in the flights in particular, I think some of the flights are higher than normal because a lot of, you know, things that are going on, you know, in almost every category is also a fair bit of COVID correction. A lot of people that were not making money during COVID finally got their customers back, trying to charge a few extra dollars in order to recover some of the losses. So the reason I'm saying all of those things is that, you know, I wouldn't be as concerned about inflation if I was a Reserve Bank, because I think there is a logical reason for it to happen post-pandemic. Now, obviously, you don't want it to become an ongoing trend, but the irony I find is that if you put interest rates up, you're contributing to the inflationary problem because, you know, interest is part of the housing cost, the cost of being a mortgage or a renter. And of course, you know, everything else, if you've got borrowed money as a business or whatever, then that's pushing your base costs up. If your employees then say, we need a pace rise, that does it. So you sort of spiral out of control pretty quickly. And hence I would have been waiting and seeing, and I would have been, you know, factoring in all of this weird stuff that's gone on, not just this last 3 months, 6 months, but this last 3 years where, you know, it's not surprising the world will take some time to figure out what the heck it should do in a post-COVID world. Now, if you have a look at that, I think we are that classic dog chasing its tail. It doesn't realize that it's its own blooming tail. So this COVID correction, you know, that could still be going for another 6, 12, 18 months because, you know, COVID is predominantly in the rearview mirror, but it's not totally extinguished. And I do think there's a lot of price point adjustment to recover that, as I mentioned. And I think, you know, we have to either, as a community, say that's fair enough, or as a community say enough's enough. But we need to start looking at that. And those, you know, contributing factors all around. And even if you want to, you know, believe that the war in Ukraine is having the massive impact that it has on global prices to the extent it does, and I'm skeptical, I must confess. But, you know, you'd have to factor that in. So why would you be worried about it if you can identify the cause? You know, you would have to factor that in and say, let's not hurt everybody for something that they don't have control on and that is logical and rational and theoretically could be short term. Now, this comes down to all sorts of things like the floods and the fires, but we have to recognize that there is going to be that cost adjustment, and therefore we don't need to throw the baby out with the bathwater. These wage uplifts, you know, that are going to be asked for, because everyone's saying, oh, it's costing me more, I need more. Again, we become our own inflation worst enemy. We're contributing to the cause, each and every one of us. We're all inflation, you know, lifters. So we have to try and, you know, hold stock. And we do have capacity, particularly in Australia, and particularly more, you know, some people more than others, but we have to be able to be sensible about the argument at the moment. And as I mentioned, lifting interest rates, which is now going to put pressure on, you know, both owner-occupiers and landlords, and the landlords will pass the pressure down to the tenants, and the you know, owner-occupiers will pass the pressure down by having less, you know, spending money, and therefore, you know, contracting the economy. That might achieve the result that the RBA wants, but we've seen from their history that they tend to overcorrect upwards and then have to overcorrect downwards. and consistency and reliability would have been a far better pattern. So a slow ascent would have been, would have been much better than the steep rise that they threw us under. And I think the other thing that's not being talked about is how much of this inflation is actually profit rather than cost. I am not convinced, particularly if you look at oil, for example, the fact that it goes up doesn't mean that the cost of production went up. It means that someone is willing to pay a higher price somewhere in the world, and therefore instantly it gets adjusted. And that really gets up my goats. And you can see proof of that in the profits of the corporations that are putting their prices up. But margins in the corporate world these days have got way, way bigger than they ever were before. And the percentage of GP profit, gross profit, and the percentage of net profits are higher than they've ever been. Corporate profits are higher than they've ever been. And no one seems to be checking that or caring. And we as consumers have become so generous in our willingness to pay that it shocks me sometimes. I mean, it's just amazing that we're willing to pay $3-4 for a bottle of water or a can of Coke, and $5,000 for a watch and all this sort of stuff. And when we do those sorts of things, you can't blame someone for saying, hey, if they'll pay it, I'll charge it. But that's driving inflation too. But I'm not sure if we can get that back. We're also seeing across the globe more and more government contracts going out for more and more value. And again, when those people are getting those contracts, they're hiring labor at much higher rates than they perhaps would if it was a private contract. What they charge you and me for doing something at our house is different than what the government would pay. So the government needs to start introducing some checks and balances to say, are they actually paying market rate or are they paying government rate? Because with the amount of government expenditure on infrastructure projects and new development and things like that, that's setting the bar higher in the marketplace across the world. And I think at some point they're going to have to take a step back and say, hold on, are we being too generous and should we pare it back? And again, they can see the profits that a lot of these companies are getting because they're public companies, but no one seems to want to do that. And therefore, it does beg the question, normally the market would sort of say, hold on, that can of Coke at $4 is too expensive, I won't buy it. Okay, and then next week you'd see Coke on special, get 2 cans of Coke for the price of 1. And that would be normal market adjustment. But I think we're getting a bit out of hand, so are we really going to be able to get the market back where we say, hold on, that's not an acceptable price to us? Or is everybody going to keep pushing their price out and saying, that's my price, take it or leave it? It'll be an interesting thing to watch over the next 2, 3, 4 years. The only thing that I do know is that, the law of supply and demand will still be the dominant factor, and that will eventually do it. If you can't sell your goods, you'll have to reduce them. If you can't sell your services, you'll have to reduce them. And so we'll see what goes on. But I do know, particularly for Australia, that demand is going to stay pretty damn strong. We've got a very high disposable income. We're the highest net savers in the world. We're the highest average weekly earners in the world. We've got a great lifestyle. So, we can afford to pay a lot of the things that we do. So it'll be an interesting experiment to see whether the market says, oh, because my interest rates went up, I'm not going to buy that as often. So unless you sell it to me cheaper, I'm not coming back. And whether the market will then listen and then adjust the price accordingly, which is when inflation corrects. Interest rates aren't going to do it. They do it maybe by saying less disposable income, be more careful. But the market has to do the adjustment. So that's going to be very interesting for me. And that's the only way we'll get inflation under control. But there's a lot of wild cards